So welcome everybody. Glad to have you guys here today for today's webinar presentation. My name is Sean Kozak. I'm one of the co-founders of ARC. And I'm accompanied by Ashley, the COO, and Jim, the head of sales and marketing. I believe I've got also Jeff, my development ops manager in here. We got the whole team in here. So just a couple groundkeeping rules. I am recording this. I know some of you may or may not be able to stay to the end of the webinar. That's fine. We'll send a webinar recording out, so you guys can access the information. I'm assuming most of you will want to watch this presentation over again. And we do answer the questions. I may not get to them in the chat box because I'm going to be presenting, but my team is here to go over them. So they'll do their best. And then what we'll do is we'll stay at the end of the presentation to go over all the Q&A. It normally leads to a good discussion, right? Once everybody's seen the presentation. And so before I go into the details today, can you guys do me a favor and just tell me if you are happy with your trading results or not? Just a yes or no. You're raking in the cash, or N, you're really not. You know, just it's either yes or no. You're either making a shitload of money and you're super happy, or N, you're not. Okay. Harry, Brad, right? You're new, Lenny says no. The majority, lukewarm, Al says, right? Got people in the middle, right? Okay. Most of you guys saying no. Okay. So there's a really unique story to today's webinar, and I believe that a really great story sells everything. So I'm going to take 1 minute to give you that intro, and it's going to kind of lead the context for today's presentation. Okay. How many of you guys are familiar with trend trading? Yeah. You hear the trend is your friend? Yeah, you've heard of a pullback before? Okay. Well, as an instructor, I've been privileged to learn with a lot of great traders. I've been a trade room educator for years. I've taught all my instructors. I'm the senior architect behind ARC and all of our development teams. So I work with the development side, I work with the programmers, but I also work on the trading side, right? I have a lot of experience, and yes, even I have mentors, right? Everybody has a mentor, and you're never too good to have no mentors, right? Like I believe that everybody's learning at some stage of the game, right? Even if you're a very advanced trader, you learn from people that are even more than you, right? So I always like to watch experienced traders. I pay for courses, I buy programs. You believe it, even though you guys buy from us, I do the same thing. In fact, I bought pretty much everything that exists in this industry. Why? Because I like to study everything. I like to study everybody. Why? Because I like to innovate. I like to build products. I like to develop new alpha, right? And knowledge is power, I believe, and especially in trading, because you're always learning something in trading. One of my mentors is a very successful trader. He's trading for funded prop firms, and he trades this system. He trades this system manually because that's all he's ever done is traded it manually. And when I learned what he was doing, it was so simple yet so unique, it made perfect sense to me to build the strategy and bring it into NeuroStreet's school. As you know, NeuroStreet Academy is one of our partner brands, and we have trade rooms running, and we have educators. Heck, Jim is even here today. He's one of the instructors, right? And one of the strategies that we've brought in is, you know, called the Ready, Set, Go. Essentially, it's a pullback trading system that allows you to capture the pullbacks without having to take excessive heat and without trying to catch a falling knife. And what's unique about this is that this was not a strategy that we essentially developed. It was a strategy that was taught to me by somebody that's very good at trading. And I brought it into the school to teach all of our students because it's a very good trading system. But it's so good that I said, you know, Jeff, we need to automate this. We need to automate this because it doesn't just work in day trading. It works in every time frame we've applied it to. So we're going to get into this, but the key here is that we call it the Ready, Set, Go because it's like priming the pump for a big trend trade, but it can be traded in any condition because you can have micro trends, macro trends, you name it. We're going to get into that. So the story is that this was a validated trading system well before we ever automated it. We just needed to automate it so that we could show you the performance and we could do the heavy lifting for you. How many of you guys think that that's something worthwhile learning, right? If you know the system's got merit manually, you automate the systems because you know that it's already performing. There's a different edge to that, right? Rather than just building algos, right? So that's kind of the backstory. I just wanted to kind of give you that context because this is why I'm super excited about this. In fact, Jim and I are even talking about Jim bringing it into the gap trading room as well for all the gap traders, right? Periodically, he's going to bring it in and go over that. We'll talk more about that later. Okay. So without further ado, we're going to talk about how to nail the best pullbacks that you could possibly trade. And you can do it as a scalper, day trader, intraday swing, investor. It works on any market, any time frame. Now, I need to cover a quick disclaimer because we're talking about algos, we're talking about performance, and by law, I have to put this in here. Can you guys do me a favor and just type a Y in the chat box that you accept the risks and we can move on like professionals? Yep. Just want to make sure we're on the same page. Okay. Great. So I've been changing the way I teach because when I was learning how to trade, I never wanted to learn information. I wanted to learn from somebody that had results and somebody that was successful. I've watched a lot of people sell courses and sell systems. Heck, I spent close to $100,000 myself on education programs over the years. And one of the things that I never liked was everybody talked a lot of bullshit and they never really got into the meat. How many of you guys agree with that? You guys have probably been to presentations where they just talk about a lot of fluff and they never really get into the meat, right? So my promise today is no bull, you know what? I don't have time for it, right? Time is very precious to me and it's almost more precious to you guys. What you're seeing here is the performance over the last month on one of our templates. I'll show you this. This was literally the back test and the optimization for one of the templates we're going to give you. What you're seeing here is 2 trading signals. Now, we use a couple indicators here for the filter, and it's a price action pullback system. But we're going to walk you through the exact rules, and I'm going to show you the templates for all of the different time frames and all of the different markets, so you can essentially see what it is we're trading and what it is that's generating these types of results, right? How many of you guys made over $18,000 last month trading? Can you guys tell me, did anybody here make over 20 grand last month? I just want to know if anybody here took a $20,000 paycheck in trading. Rich did? Great, brother. I love it. I'm not saying everybody here may not, but I just like to know, right? How many of you guys would have liked to make something even close to that? Right? Exactly. So what I'm going to do today is we're going to break down the rules of the system. We're going to break down the rules of the entry. We're going to show you some examples. We're going to show you the results. We're just keep it super simple, keep it easy to learn so that you guys understand that you can actually do this, okay? Now, the reason I like to lead with that is because I know a lot of you guys, it's the end of your day, and mentally you're probably checking out, right? You're tired, you've been looking at the screens, maybe you got stuff to do this afternoon or whatever the case may be. But all I ask is you do me one favor as I'm presenting this presentation, okay? If you were making a whole lot of money trading, you wouldn't be here, right? For the most of you. There might be a few of you in here that are reaping in the cash and you just like to learn more stuff. And I value that. I think education is important. But for the most of you, you came here for a purpose. What was that purpose? Can you guys put that in the chat box? Why did you come here today? Is it because you want to make more money? Is you're looking for a better strategy? You're looking for better alpha? You're looking for a better solution? You just like to hear me talk? What is it, right? Like, I just need to know this, right? Because the only way I can do this properly for you and help you is if you make me a promise that you let go of all the shit that's happened before today. I can't help you if you're holding on to baggage. Make sense? We agree that if you're going to get through something, you got to let go of what's been holding you back, right? It's no different than if you're training a diet or if you're dating the wrong person. You got to let go of the old and you got to be in with the new, okay? So Give me a yes that you guys are willing to take down the walls psychologically and mentally and emotionally so that you can at least hear and learn what it is I'm about to share with you, right? Okay. Over the years, I've traded manually, for longer than I can care to remember. I'm a great trader. I've taught a lot of great traders. I'm proud of that. I know how to make good money in the markets. One day, when I sell all my companies, I will sit down and trade. I can promise you that. I love trading. It's a passion. But over the last 10 years, I've seen something that I can honestly say with a lot of data and a lot of evidence that 9 times out of 10, an algo will outperform a human trader. I didn't used to believe that because I wasn't really into automated trading. Over the last 5 years, I've evolved into understanding data-driven details because I know that data can give you the confidence and remove the human barriers that are holding you back. Now, that doesn't mean manual traders don't make money. That doesn't mean you shouldn't trade discretionarily. But if you're trying to change your results, would it not make sense to look at a better solution? Automation can fix a lot of things. Can't fix all of it, can't fix everything, but it can fix a lot. The most important thing that I think matters is the data. If I have a manual trader on the left and I have an automated trader on the right, and we both take 50 trades, right? We both take 50 trades. Okay. How many of you think that, well, let me ask you this. How many of you guys log every single trade and you have an exact log with exact screenshots of every single trade? You have the performance reports of everything you've done in the market. Give me a yes or a no. There's a few of you that yes, the majority, no. Which means if you're trading as a manual trader, you do not have the evidence to back any confidence. You have nothing to give you that confidence to get up in the morning and say, okay, I'm going to trade this strategy because I have the evidence that it's good. And over the past 50 trades or 50 days or whatever the case may be, right? You're basically gambling because you don't know if you have an edge. What automation does is it gives you data. And it gives you the information to do what? If I can look at all of the data over the last 100 trades, 150 trades, 50 days, 50 weeks, whatever it takes, what is knowing that in the past, what you're about to do had some form of information or evidence that could prove that what you're about to do is going to make money or have the potential to make money? Is that not 10 times better than just guessing? Doesn't that make sense? Like, wouldn't you rather buy a business that you knew produced revenue than basically just starting a random business and being like, well, I hope I get some customers? Give me a yes that data would give you some form of information to build confidence in your ability to approach the market every day with a different way of looking at things. Hands down. As a business owner, you're not a trader. You're a business owner that uses trading as the vehicle to generate returns. If you were a real estate agent, your vehicle would be flipping houses. If you're a restaurant owner, your vehicle would be selling food. As a trader, you're not technically a trader. You're managing money. And trading is the vehicle that you do that. So wouldn't it make sense to use data? All the other stuff is icing on the cake, increasing your execution speed, having more accurate signals, being able to improve the way you enter trades. You're not missing trades. This is all just a result of the human stuff that gets in the way. This is the most important part. One thing that I want to point out is that this is all I care about today, is giving you alpha backed by data that has a leg to stand on. I'm not trying to sit here, hey, believe in Sean. He's got the next thing. Believe in the way Sean trades. None of that matters, guys. All that matters is that I can show you how a computer produced X results over X data, and it shows consistency so that you have the belief to want to trade it. Because that's all that really matters in automation. Now, one thing that's different, and this is something that's important, that I am not here to just sell you a signal. You could go and build any signal in the business. What we do with ARC is very different, which is why we are, in fact, the #1 algo distributor in the business. There are other algo companies, but there is nobody that does what ARC does. We have put our flag in the sand. We have claimed the fame. We are the #1 source for automated systems in the world on the Ninjatrader platform, period. So much that even some of the other vendors in the business that sell automation now want to sell our products because they can't beat what we do. Why am I saying that? Because we're not just selling signals. We've rebuilt Ninjatrader's infrastructure to be able to create automated systems and build and test those systems for the best performance. Jeff, are you here right now? I just want to know, is he still here?
Yeah, I'm here, Sean.
Okay, Jeff, introduce yourself. I just want everybody to know who you are.
Oh, hey, everybody. I'm Jeff Zimmerman. I'm kind of responsible for all the putting these products together that we sell and everything that goes with that.
Jeff, can I ask you a question? How much time a month do you spend building and testing systems with our developers and with me, and just optimizing and just testing different variations of time frames and strategy settings? And how much time do you literally spend, your entire days, your weeks?
Well, it's a big number. I occasionally get a day off, on the weekend sometime.
Yeah. But like, would you say that your entire focus is building an optimized performance?
Yeah, that's pretty much what I do here. Pretty much.
I have teams, programmers and R&D guys like Jeff. All they do is look for positive alpha. That's all they do. Their job in the business, thank you, Jeff, is to take the software that we build and find the best strategy variations and the best performance and pre-build everything so that all of our users, we have thousands of automated traders around the world who use our systems because of the engine that goes behind the signals. Yes, we sell the signal, but the signal is only as good as the way in which you trade it, the time of day, the money management, the size of your stops and targets, the trailing stops, the trailing exits, the windows in which you trade, the filters, trend trading versus oscillation versus breakouts versus reversals. Everything is built into the engine. The signal is just the rule for the entry. This is what separates really, really strong strategy performance versus, hey, just buy my system. How many of you guys would want that kind of evidence behind the strategies that you're using rather than just buying a black box? Because there's a lot of guys out there selling systems. There is nobody that does what we have. And so why am I sharing this with you? Because what I'm about to share with you is the result of us taking the engine and combining it with the signal. The RSG algo stands for ready, set, go. It's very simple. The market gives an impulse. Okay. Like this. Ready, set, go. You say, Sean, that's just a freaking pullback. Ah, but is it? Is it? Because I know a lot of people that have an EMA here. They take a pullback. I'm going to put a buy limit order in here. And it just goes like this. Holy shit, what happened? I hit my stop. I know a lot of people that take a pullback. There's an EMA. They don't put the pullback here because they're scared, because they don't want to get stopped out. The pullback comes. They're like, oh, it's working. Then what they do is they take the breakout because they want that confirmation, but then they lose all of that profit because they were waiting for too much confirmation. How many of you guys know what I'm talking about? For all of you trend traders in here that know that I really hope this pullback holds. I really hope this pullback holds. I just, right? You get that, right? And then all of a sudden, oh my God, the pullback's holding. I'm late. Oh shit, I just missed out on half my profit. Oh crap. That's the problem. because everybody is scared to take heat and everybody's late to the party once they've gotten that evidence of confirmation. So what we did was we took a mechanical way of understanding when it made sense to enter the pullback based off pattern recognition, based off trend filters, and based off price. And let's not forget the fact that this was a strategy that was being traded manually by very successful prop traders that then got brought into our school, then became an algo. Okay. It wasn't just, hey, let's build this algo. This already had a lot of alpha manually. Discretionary traders were killing it trading this strategy. Now we automate it, and our performance reports will validate what we've seen on the manual side. Now, one thing you're going to like about this, how many of you guys are day traders in here? Just type a yes. I want to know how many of you guys are day trading. Almost everybody, I would assume. Okay. How many of you guys are intra swing trading, meaning you're catching one big move a day, the big move of each day. You're looking for the big leg of the day, right? Some of you guys don't like to just scalp, but you want the big leg every trade of the market. And most times you'll have one big move every day in the session, right? How many of you guys are swing trading, investing, not just on futures, but stocks, futures, Forex, crypto, whatever the case may be? Okay. Yeah. This setup works on everything we've ever applied it to. I've seen it just hit on Bitcoin. Bitcoin just ripped on this exact same trade. I could pull up the charts and show you the exact same entry. I've seen it work on Forex for massive runs. And yet I've also seen it work for scalping on as small as an 80 volume chart, which Jim will show you in the demo here today. The key here is that this isn't just some, hey, this symbol that works once in a while. This thing hits, and it hits on everything. I will challenge you to show me where this strategy is not going to work. I truly will challenge you guys to do that. I have not been able to find that yet, which is why it's used for day trading. It's used for swing trading. It's used for investing. When you look at the difference per micro and macro trends, micro trends could be as small as a 1 minute chart, right? A macro trend could be as big as a weekly or a monthly chart, or even down to a daily, right? Or even an hourly, right? Just depends on what you're looking. You could be day trading on a 5 minute, day trading on a 30-second chart. It's going to work. Which is why, because it's all following the same logic. Now, how many of you guys like taking action and actionable trades? Like, how many of you guys are like very simple and like you only want one trade a day or 2 trades a day? Give me a yes if you're like a one and done trader, or if you're like, I'm only looking for 1 or 2 trades a day. Give me a yes. Okay. You're looking for just the cream. You want that really, really, really sexy trade. You know, it's got huge expectancy. Great. A lot of you guys, okay? How many of you guys like lots of trades? You like action. You like taking lots of trades. You like to be in the market. You like to participate, right? You can get both with this algo, which is unique about this because it just depends on the time frame. So if you want a lot of activity, drop your time frames. If you want less activity, increase your time frames. We've got templates on multiple different time frames. We're going to show you this. How many of you guys like simple trades? Like just keep it simple. Show me how to make a lot of money. Keep it super simple. Yes? Okay. Well, I'm going to show you 3 different patterns. Okay. So now, this is not an inside bar signal. We just like to demonstrate when these patterns can happen with inside bars and outside bars because it has no bearing. My favorite is the sweep, which we'll talk about here. I know, Jim, you and I have talked about this. The sweep has got some power behind it, but we're going to get into that. If I'm not mistaken, Jim, this outside bar is technically a sweep in and of itself.
Yeah, it just happens to close a little further back in. Yep.
Yeah, so this is also a sweep. We'll talk about what a sweep is, but essentially what you're seeing here, there's 3 ways in which this strategy can fire, which is why it's unique in that it's going to change every single time. The market's going to change, and you never know when one of these 3 variations are going to hit. And essentially what's happening, okay, is let's say you get the market coming up, okay, you get pullback. Right? You get pullbacks, you get these down bars, right? Whenever, let's just say this is a down bar, okay? I'm going to put an arrow, that's a down bar. If you have an EMA here, okay, putting a pending limit order in this could be really dangerous. Like you have no evidence that it's going to hold. You have no evidence it's going to hold, okay? And you're essentially catching a falling knife. If you wait for this to trade this way, right? If you wait for the market to trade that way, you're late. we found a way to basically look inside the pattern, which is what this signal is right here, which is what this signal is here, and this signal here, and this signal here. We found a way to look inside this pattern to look at where price is closing relative to the pullback, so that you get literally the best entry you could possibly ever get in a pullback with limited risk. We sat down and we talked about this, AJ, and we said, you know, how do you really define this? Because it's got a huge edge, and like, what's the best way to say this? We've taken pullback entries and we've given literally the best place you could enter the trade for the most profit and the least risk. How many of you guys would think that that would be something that interests you? You could reduce the risk and get the most best efficiency in the execution possible in a pullback. Yes or no? Yeah, that's exactly why we call this the priming of the pump, because what we're doing, and I'll give you an example. You don't see the strategy entering on this EMA. You don't see the strategy entering here. You see the strategy entering here, but you have all this room for profit, but you didn't take the heat. You didn't take the heat. Same thing here. We didn't take the entry here. We didn't even take it here. You took it here. It has everything to do with the relationship between the down bar and the next candle as to how it unfolds. You'll see here the same thing here in this environment. It has everything to do with how the up candle forms in this environment. And so without going into being a developer and figuring out what's the logic behind here, I can promise you this, that if you can see how simple this is. When we have a pullback, and I'm a big believer in, like, if somebody's going to trade something, show me the frick how it does what it does. Like, I've seen so many people said, hey, just trade this strategy. I say, well, I don't understand what you're doing. How the hell can anybody trade it? Give me a yes if that makes sense. You need to kind of understand what the hell's going on if you're going to trade it, right? It's your money on the line. It's your evals. You're the one paying for it, right? I'm a big believer of exposing what's under the hood so you can have fun driving the car. You need to understand it. The way we do this is we look, what do you think the red bar is? Let me just ask you a question. What do you think the red bar is? Right here, this candle right here. What do you think that red bar is inside the pullback? You guys tell me what you think it is. I like your answer. I like your answer. Luis, profit taking. Okay. It is profit taking. But you don't know if that profit takes is going to be 1 bar, 2 bars, 3 bars, if it's going to be a pullback on the EMA, etc. What matters is this candle here. This candle here matters a lot. Because if you were to see this up bar break the highs here, you've missed half the trade. Okay? You've missed it. Where this candle closes relative to this candle, we call this inducement because profit taking is actually a form of inducement. And the reason it's inducement is because if this is indeed profit taking, then the market is waiting for an opportunity to load back up, which means this is not really selling. This is really inducement. It's inducing an opportunity for the market to load back up with more opportunity. So what we do is we look at the relationship between the next candle to the inducement bar, which is 1 bar, 2 bar, 3 bar, how many ever down bars we need. And the software will automatically find the close. As long as this close is happening in the right spot on the inducement, what's going to happen is we're going to trigger an entry right at the open of that bar. Now, let me ask you this. How many of you guys see the fact that this entry here did not take the risk on the pullback and it did not lose the profit on the run? This is critical because you're no longer using indicators to drive the signal. You're using price to drive the data point. We're using the EMAs and stuff for filters because it's a trend trading environment. But I mean, you could do this on a very small time frame and catch every trend of the day, right? Now let's take a look at the different setups. Right here. Jim A, the long and the short of it, right? So let me give you an example here. We're looking at these inducement candles. It breaks above the EMA, it pulls back. There's the inducement candle, right? If you were entering on this EMA, guess what? You're a gambler. You are an indicator-driven sucker that is hoping the EMA holds. How many of you guys have put an EMA on your chart? You've bought a pullback. You said, I really hope this 20 period holds today, or this 8 period EMA. I hope it holds. The 50's got to hold, right? You guys all know what I'm talking about. Everybody's used an EMA. Everybody's used a trend indicator before. Everybody's used the VWAP, even the VWAP. I hope the VWAP holds today when they come back for the pullback, until it doesn't. What we're doing is we're not relying on the EMA or the indicator or the whatever it is. We're relying on the relationship to where price closes inside of the inducement bar to tell us that this is inducement. This is truly going to rip as a primer. And that's the whole backbone to the ready, set, go. The ready is the impulse. The set is the inducement. The go is the trigger that triggers on an inside close on the inducement. And we're going to get into that here in a moment when we show you a demo. But this is what's fun for me, okay? I had Jeff, unlike the other, we only use the EMA as a filter, Jean, because we need the close to happen on the right side of the EMA. We don't want to be taking closes once it's violated the trend. So we use an EMA as exponential moving average, John, yeah. But we use the EMA as a filter, which I believe, Jeff, is an on-off. You don't need to use it if you don't want to.
Yeah, that's optional. Yep.
Yeah, but we prefer to use it. It just gives us better results. But it's not part of the entry logic. It's used as a filter. So let me go to this, okay? What I'm going to do today, we're going to show a demo. These are all different markets, different time frames. So this is an MES on a 15-minute chart. This is an MNQ on a 15-minute. This is an MNQ on a 3-minute. This is NASDAQ on a 5-minute. This is the SES on a 3-minute. We tried putting this on everything, literally everything, because it's a price action setup, and it's literally the same setup. It'll happen on any time frame. You could give me any chart, any time frame, any market. I don't care. I'll find you 5 of those trades within the last 2 days. Why? Because I can find that pattern everywhere, which is what makes the strategy so effective, is that there's expectancy on every market and every time frame. So what markets are you trading, guys? And what time frames? You tell me. Are you using volume charts? Are you using Renko charts? Are you guys using time-based charts? What are you trading? Because I can put this on anything. Volume, it works really good on volume, Nikki. Yeah, 5-minute. It only works on variable range bars. So it won't work on range. And well, Jeff, would it work on a range? I think it would work on a range, just depending on the pattern. The close would have to happen inside the prior bar.
Yeah, it would have to be, it would be a little different than on variable range. Yeah.
Yeah. But the key here is that every time frame we put it on, it hit, which is why I'm sharing this with you, because I really think that you will find alpha on many different time frames for every market that you apply it to. And we have templates built for everything that you're seeing here, so you will have access to all of this. Okay. Now, a couple of things that I want to make note of is that we have money management adaptive in the engine. It's very important that you understand why this is powerful, is because every single trade will have a different size candle, which means if your stop size needs to be different, it automatically adapts your position sizing and your money management. So the key here is to know that we have it built that all you need to do is enter your risk per trade. It will automatically size your positions. It'll automatically put you into 5 contracts, 50 contracts, 1 contract, 5 shares, 100 shares, 1,000 shares, whatever it is you decide to trade. The reason we have this is because sometimes you might have a tight stop. Sometimes you might have a large stop. The software does everything for you so that you don't have to think and you don't have to worry about it, because the number one problem with a lot of traders is that they don't understand how to quickly adapt their position sizing when the market's changing. And if you don't have money management put in place, you'll have a hard time adapting good strategy ethics, right? Now, the high watermark, this is sexy, okay? So let me pull this up. this is something I'm going to spend a little bit of time here today. I didn't last time, so you guys are happy. I'm in a great mood. I'm going to share this. How many of you guys want to learn what the big guys do with money management? How many of you guys want to learn some alpha here? I'm going to give you guys some bones here. I'm going to throw you guys some winning, sexy things. Okay. How many of you guys have heard, let your winners run? Let your winners run. It's not a word, it's an acronym. Let your winners run. Okay. If you set your daily goal, like let's say you have a daily loss limit, daily loss, let's say you risk $500, right? You're not going to risk more than $500, okay? But let's say you cap your daily goal at 1,000, okay? If you have a daily goal, you're basically telling the market to stop paying you, which makes absolutely no sense to me from a money management perspective. How do you know if today the market's going to give you a whole lot of winning trades or it's not? You don't, which is the number one reason retail traders get this ass backwards. So let me explain something to you guys that I learned from a prop firm manager who manages like 50 traders on a risk desk. The way they do this and the way they manage risk across lots of different traders is they don't use daily goals and profit goals. They use high watermark functions. Why? Why would they ever want to stop their good traders from making a shitload of money if the market's paying them? They don't, but they still want to protect the downside risk. So what we did was we took their model and we built it into the engine. What does that mean? You can set a high watermark that, let's say you set it to after $1,000, right? You have a high watermark of, let's say, 30%, which means instead of stopping trading at 1,000, let's say I make 200, lose 50. I make 600, I'm up, I'm up 5, right? Boom, there's lose 100. Let's say, boom, I hit $1,000 in profit for the day, right? Great. Let's say that's the morning and you have the rest of the day to trade, or you have the rest of your session to trade. If you set a goal, you stop. But what if the market just kept paying you that day because it was a really big trending day or had a lot of movement? What you're saying is that you don't want more money. What the high watermark does is it basically says, after we reach this point of profit, if you lose 30% of that profit, you stop trading. If it pulled back here to 30%, it shuts you off. What this allows, but if this didn't pull back and it gave you $2,000 in the day, what you've basically said was, well, I have a daily goal of 1,000, but the market would have gave me 2 and I just don't want that extra money. That's crazy. It doesn't make any sense. You're in the business of making money as a trader, not setting these fictitious rules around why you should not make more money. Your job is to make as much money in the market while protecting the downside. So if all you need to do is set a threshold and always protect the downside, you always leave making money. As long as you hit your threshold, you're protected. Now, you don't have to have a $1,000 threshold. You could have a $500 threshold. I know people that leave successful every day because they implement a high watermark. Why? Because they understand the business of making money. What this does is it ensures that you always leave when you're up profit. You don't give it back, but it also doesn't cap your upside gains. This is a win-win for you. And we've built this into the model so that instead of setting goals, which are these things, right? You can do that too. It's up to you. I wouldn't personally. I'm all about the high watermark. I believe in not doing this and always doing this, right? Now, how many of you guys would like to learn how to do that? We will teach that in the AMA with all the traders using the systems. We're going to be doing that tomorrow with the Algo. We're going to show you how to set this up. And Jeff and Jim, you guys can make sure that you guys teach that in the AMA. We want to make sure everybody understands that. It's very important that they can know how to do that. Okay. So let's talk about a demo. I am not I am not Houdini. I cannot control live markets. I wish I could. I'd be a billionaire. But what I've done is Jim's filmed a video to kind of demonstrate the algo in action. So I'm going to turn on my speaker and I'm going to turn on the system audio here so that you guys can watch this. Are you guys okay with me playing about a 5-minute video to show the strategy executing and to show it kind of unfolding in real time? I think videos demonstrate things in a better way than just me talking, because it'll show you how the strategy's exiting, or I guess you say entering and exiting trades. So I'm going to hit play. Let me know if you can hear this.
Hey traders, Jim Simmons here.
Could you hear that? Okay, perfect. So I'm going to basically turn this on here, okay?
With Neural Street Trading Academy and Arc AI here to show you the all-new Ready, Set, Go Algo. Now, some of you in the GAP program may recognize the Ready, Set name, and that's because that's exactly what this system is based off of, is the Ready, Set setup that we've traded. And so a number of things going on here that we'll break down as we get the trades. For now, I'm going to let the system go ahead and take the trades for the day. And then at the end, we'll recap what those trades are and what the setup is. So let's go ahead and see what this thing can do. Here we go.
So he's going to speed this up, right? There's the inducement. There's the entry. Okay, there's a trade. It's going to speed this up. Okay, there's a short. I'm going to pause it. So the way that this entered this trade, really, really important here. You see this up candle? Trend crosses, you get the inducement candle. The key here is that this is what we call a liquidity sweep. This is a sweep. It's not a pullback. What that candle is, what a lot of people don't realize, is that this candle in here is a big range. Okay, it's a big trend, but it's also the high of the range on a smaller time frame. When it sweeps the highs and then goes back inside the prior candle's range, right? That's when you know there's a really good entry, because what that means is it swept the liquidity to fuel the pump to go lower. That's exactly why we call it a sweep, ready, set, go. This is what I love about the system, is because it looks for the sweeps and it takes the entries right when the market needs to prime itself. We're going to wait for another trade here. So let's stop. Another example. You get the inducement, right? Come up. There's the inducement candle right here. There's the liquidity sweep. It sweeps the highs of the prior bar, comes back in. You get the entry right at the perfect place. You're not taking the hit. You're not taking the pullback. You're not taking the sweep. You're taking the confirmation without losing all the profit. Okay. Let's take a look at this right here. We get the down bar. That's the inducement, right? You get the impulse. You pull back. There's the inside close, right? This swept the lows. You're no way going to do this manually. You won't be able to see it. People do it manually, but it's not easy. You're going to miss a lot of trades. This is why we had to automate this, because traders can see it, but a lot of times they can't do it. Let's take a look at that one. Let's take a look at this one right here. Up bar, sweep, came in, entered right here. That is the perfect place to enter that trade. It is, you're not taking the heat on the pullback, you're not gambling, and you're not losing on the profit, right? The lows are down here. A lot of people want to see that market trading down. They take that, they lose half the leg. And this is why a lot of traders leave profit on the table, and they're too scared to take the risk.
Okay, so that is the end of the day. Let's go back and take a look at the trades from start to finish and break down what's happening on these trades. So we've got first one here. So here's what's happening. The EMAs have to be down, all of them, and the candle has to close below the EMAs in order to trigger an order. So that's number one. That's what's going on in this setting here. Normally, you at least, well, you can set it either way. If you want to be able to only trade below the EMA on shorts and above the EMA for longs, you can do that. You can turn it off. But this particular one has a double EMA plus it requires to close below this. This is an 8, this is a 9, this is a 20, just for reference. The chart is MNQ on a 2000 volume, and what we have here, we can see we have a pullback start, and then this bar closes inside the body of the candle. And once we see that, it takes the trade. Now, I do have it set to require that this second bar, which is our signal bar, if you will, this one has to sweep the high of the previous candle on shorts. So it swept the high, came down, closed inside, good entry, and good target. Stop goes above the swing, above the candle, and target is going to be 1-to-1 on these. So that's the first trade. Let's keep going. Now the EMAs are up. There's our start of our pullback, bearish bar. We closed inside the bearish bar body, and we swept the low. There's the trade. There's another one. There's the pullback. This one closed inside, but you notice how this one did not sweep the low of the previous bar. So there was no trade on that one. Instead, this one did sweep, closed inside the body. There's the trade. Took a while, but hit target there. Let me keep going. There's another one. There's the pivot. And you can see this one did not close inside the body of the previous bar, so there was no trade. There's the high, down bar, closed up inside the body, swept the low. There's the trade. Almost got stopped out. There's another one. Pullback starts. Again, EMAs are down. Up bar, swept the high, came down, closed inside the body. There it is. And there it is again.
I can't stress enough how sexy these trades are when they sweep the pivot. Sometimes traders will use it without the sweep setting. I love the sweep setting because I understand that if you have a candle, okay, like this, okay, let's say that's the trend, right? There you go. That's the down candle, okay? If we sweep the low and then come back in to close inside of that, that's a range on another time frame. When you have a range like this, I'm sure you guys have seen consolidation, right? What does the market need to do before it goes, right? It comes down, boom, it sweeps the liquidity from the range, and then it rips. This range is that. That's what that is. It's a range on a smaller time frame. So the liquidity sweep is done internally just by looking at the candle pivots, which is why I really find that this is the best setting for this. I mean, that's just my preference, but hey, what do I know?
This one, here we go. There's the low, up bar, closed inside, and swept the high. There's the trade. Would have traded at the open of this bar, so it did take some heat, but eventually went on to pay. And that is the end of the day for that one. Let's go to crude and take a look at the trades on MCL. This is an 80 volume chart. Start time was 8 o'clock. I don't think there was no trades early. Keep going, and we get to 10 o'clock. Still nothing. Got our first trade at 10:43. So there's the up bar, swept the high, closed inside the body of the bar. And that one was a stop out. Market said nope. Next one, down bar, up bar, EMAs are down. We closed inside the body of the bar and we swept the high. There's the
swept the high of the bar. There's the sweep, inside close, best location for a trade.
Trade. Pretty big target on that actually. This one has a higher percentage for the stop, so these are bigger trades. Just what worked in terms of optimization. Okay, here's the next one. Up bar, swept the high, closed inside. There's the trade. Let's keep going. And that's it. So that would have been 1, 2 winners, and was it just 2 winners? I thought there was a stop. Yeah, two winners and a stop. So 2 out of 3 on crude. And then NQ was 1, 2, 3, 4, 5, 6. 6 winners. 7 winners. 7 trades, all wins. I'll take that. And then 2 out of 3 on crude. So really a great day. So that's a breakdown on how this system works. We'll see you in the AMA. Be sure to be there so you can learn everything that this thing can do. We'll see you there. Cheers.
So a couple things. This is the breakdown of one of the templates. We're going to get into the different templates now. Are you guys okay with us? Yeah, it just depends on how you want to set it up. We're going to get into the hit rates, and we're going to get into different time frames now. Are you guys okay with going over that? So let's take a look at that. Let's take a look at this. So a couple things here. We decided to do something a little different because we have a lot of traders asking about different markets, different time frames. This is a 15-minute. This is a 15-minute. This is a one and done trade. It's looking for the big trade of the day. So if you're looking for, like, if you're a day trader, let me just kind of repeat this for a second. A lot of day traders overtrade, and they basically don't make a lot of money. Some day traders trade the right setups, but then they give it all back. We know that most successful traders are going to trade on a smaller time frame, and then they're most likely going to stack a bigger trade during the day, right? If you could capture the small moves, little base hits, and these would, let me give you an example. This would be considered base hits, right? A 5-minute chart, a base hit. A 3-minute chart, this is a base hit chart. This is a base hit. So these are all scalping templates. These are all the Grand Slams, the GS. Grand Slams are your big trade of the day, one and dones. Why do we want the one and dones to be on the higher time frame? Because they're just extremely profitable. We found that these trades hit on 15-minute charts like clockwork. That doesn't mean you don't want to trade the smaller time frames. I would want to do them both. I would rather have a scalping template running and then have the higher time frame running as well, because you get the best of both. Why would you not want to scalp? And then when the big trade sets up, you get the big trade of the day. How many of you guys would like to catch both? Your day trades and then your big slam for the day? Because it happens all the time, right? Exactly. So what we did was we built this. We built this for, and ultimately I could take a look at the 15-minute. We'll go in here for a second, right? This is the breakdown over the last, it was up to the 24th. It's the 28th, but we just had a holiday. So this ran all the way to Friday, right? So this was running to Friday. Monday was a holiday. So that was all the way up to the last trading day. Didn't take today because I had the demo loaded and we were prepping for the event. But nonetheless, this was the 15-minute trades, right? Let's go into the chart. Let's take a look at this. So let's take a look on this, and let's go back. I'll just find, doesn't matter, anything. I could go in anything and we just go back to any day, right? It doesn't matter. Let's just let me show you an example here. We'll go back and take a look at this one because it's cleaner to see it. Okay, take a look at this. Great example of not taking any heat on this pullback. Why? If you were trading, now this is a 15-minute, so I'm not expecting everybody to trade 15 minutes all day long. You're not supposed to. You're probably going to have a couple really good day trades in here while this trade is setting up, and we're going to show you both. Here's the ready, the pullback, which is a 2-bar inducement at this time. This is a 2-bar pull. If you put the pending order here, how do you know it's going to pull? How do you know it's going to hold? You don't. You have no way to know. We get the inside close. This was not a sweep. This was an inside close. This did not sweep the lows. Okay. And the other examples we did, but this one didn't. Inside close, huge run for this. Okay. Let's take a look at the other one. Let's go back to it. Take a look at this one. I think here. This one had a profit on the same bar. This one had a stop. Okay. Go back over here. Here was the sweep. This is a great example of a sweep right here. Let's take a look at this. Came back down. There was the sweep on the low. Came back, swept the lows. There was the inducement candle, which doesn't even really look like a pullback, but it is the pattern. And then boom, catch the swing. Now, some traders would say, well, you know what, Sean, not a big fan of the 15-minute chart. Okay, we get that, right? You can trade 15 minutes, 5 minutes, 3 minutes, 1 minute, volume charts. We only have so many guys building the templates because ultimately there's too many time frames to trade, right? And if I want to go in here, take a look at the 5 minute, let's take a look at the 5 minute for a second, okay? This is the 5 minute. Let's go into the charts for a second. Let's go back here. Let's just go and find some activity. Let's take a look here. Great example. I just want to show you the primer. This is how you trade on the 5 minute. Here was a 3-bar inducement, okay? If this was the low of the day and this trade was coming up, we have no way to know that this is not going to go like this. We have no way to know that. But what the software does here is it says, okay, this is a range. And if it sweeps the range and closes right inside the candle of the prior range, this is an inducement and this is getting ready to flip. And that's exactly why you get such a huge reaction right away. Boom. We're not trying to take the entire leg. This is a 5 minute chart, right? Tight stops, tight targets, 1-to-1. Easy. Okay. Now some traders want a lot of action. I'll give you an example. This is the NASDAQ. This trade hits. There's a lot of action here. Yeah, let's take a look at this. And I think some of you guys wanted win rates, right? I mean, this is a 4 profit factor on this, right? It's almost 70% profitable on this with a 4 profit factor. This here is a lot of wins. This is a lot of trades on this template, though. This is the 3 minute on the NASDAQ. Let's take a look here. There's 174 trades. Let's go back to this. 174 trades. That's a lot of trades, guys. We log 174. This went all the way back to the beginning of April. Okay, 2 months, right? Almost a 1-to-1 with a 71% hit rate. Okay, 2 profit factor on 200 trades, 175 trades. That's a very stable expectancy. A lot of people don't realize what expectancy is. Expectancy is average trade. To have a 2 profit factor over that big of a sample size, that's crazy. Yeah, that was a mistake on our end, Joe's. I don't have the commission. So just take about a couple grand off for commissions on this. I just didn't have the commission set when I loaded the workspace. So yeah, just take about, $2,000 off here for commissions. Yeah. Yeah, no problem. Right. But I'm more concerned about this to this, right? Very small drawdown for a large profit. Let's just say it's 21K net commissions. Yeah. Makes sense. More importantly, I'm more concerned about a 70% hit rate with a 0.8 R multiple. That to me has large expectancy. And if you look at the NASDAQ, that's a lot of trades. Like that's just a shit ton of trades. And, you get these runs and you get a lot of follow through on the NASDAQ because the NASDAQ pumps really quickly. And when you get these inducements, it can hit targets really, 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 great question, Patricia. It doesn't matter because we're only risking $500 per trade. So it doesn't matter how much money you start with. It matters how much you set per risk per trade, right? Now, I'll give you an example. If you risk $100 a trade, it's going to size your trades accordingly. If you risk 200, it's going to size your trades accordingly. Okay. So this is a great example of the primer here. Like you can just see trade after trade coming in on this trend here. Like it catches the move, right? This didn't hit here on this one because it didn't close inside the candle's range, which needs to happen. This did right here. This one did, right? This one did too. It came in real quick and it gave a quick target, right? I could show you trade after trade after trade, but in the end of the day, all that matters is that you can do it and you can generate these types of results, right? Now, let's go back into this. Let's take a look at this. For those of you that have stuck around to the end, how many of you guys enjoyed the presentation? Give me a yes or no. I just want to know. Feedback's always welcome. Grateful for your time. Thank you for taking time out of your day. I'm going to run a poll so that we can give one lucky. You have to be here to get into the poll. That's why we run these, right? Run a poll here. Okay, 1, 2, 3, go. I want to know who wants to win a free license. You need to say yes or we don't pull you out of the draw. So if your name gets pulled out of the randomizer 2000 and you buy it, we'll give it back to you. Right? The reason we ask the poll is because we need to know who's here. We need to pull who's here. just showing up once and then leaving, you know, you need to stick around to the end to be able to give a free license. We want to make sure that we can engage with you and give you the value you deserve. One of you guys will be walking away here with a free software license, which is great. And great. If you don't see the poll, you might be on a tablet, et cetera, but Ashley will pull the numbers. Okay. So 2, 3, 1. Thank you guys, everybody who participated, right, et cetera. Okay. So how many of you guys learned something about what we were doing? Like it's one thing to demonstrate, but did you guys learn something about the liquidity sweeps, where the prices are closing, the high water marks, et cetera, right? I always like to know if you guys took a little bit out of that. It's important for me. Okay. How many of you guys like trading on smaller time frames and larger time frames? I don't know if you guys like bigger time frames or not. You know, give me a yes if you guys like switching it up a little bit. Both, Patricia says, yeah. You like, Lenny likes it on the smaller. Yeah, okay. So what I'm going to do is I'm going to walk down the price of the software. I'm going to go over this. I think what Jim's going to do as well is, Jim, I think if I'm not mistaken, you were looking at putting this on some smaller time frame charts, maybe bring it into the trading room for all of the gap traders.
Yeah, we're looking at maybe we could do volume charts or something. I had some pretty good results on those. So
great. So Jim will put together some great stuff for the gap program. Everybody in here is going to get access to the templates for what Jeff has put together for everybody already. And you'll get access to both. Okay. So what I'm going to do is I'm going to break down the price. And there's no hidden agenda here. Like, we just map it out as it is, guys. Like, the software is $1,000. The engine is $1,000. That's a typo, right? It's supposed to be the RSG. We have a Discord group for every algo. Why do we do that? Because everybody's trading different systems, and you can share templates with other traders. You can share templates with other people that are using the same algo. The documentation is very detailed. We can install the software for you. Okay. This is the big one. Like, literally, as you know, Jeff spent close to 200 hours this month getting these templates ready. Like, literally 200 hours, like 50 hours a week building system templates for every trader in here. That could be priced at 10 grand to the right audience, right? We understand that that's not a price tag everybody can afford, so we're not going to do that. But the point is that this is way more valuable than most people care to pay attention to, just due to the fact of the sheer time it takes to produce the alpha that these templates have, right? How many of you guys would like to learn how to become a master at building, testing, and optimizing systems, right? It takes time. Oh, it takes time. Well, we've done the heavy lifting for you. We also have an algo course for those of you that are new. We got some new people in here. And we're going to be doing a deep dive tomorrow. So Jim and Jeff are going to be putting together this. We're going to go over the signals. We're going to go over money management. We're going to go over building, testing, and automating. And we're also going to go over high water marks so that you guys can understand the money management side of scaling big days. Okay. So it's not too complicated. You get all this for a huge drop. We always do huge price drops on the algos. You're saving $6 grand, right? So we're giving you $6 grand off the price. Now, you've got 48 hours to take advantage of this. Why? Because we have an AMA tomorrow, and we want to make sure that everybody takes advantage of this so that you can join us in the AMA, right? And therefore, this will be available to you guys. So you're going to want to take advantage today. Also, because we want to help you install it. So those of you that are buying today and taking advantage of the discount, we can have our teams meet with you and help with the communication. Okay. The other thing I want to mention is that we do have a guarantee. So let me talk about the guarantee. Because ARC stands behind what we do. We have a love it or swap it policy, which means, you know, if after 30 days of using the software, you know, you're not completely tickled pink, right? You can swap it. Now, it's important because a lot of people ask this. You cannot swap past purchases for launch. We're final on that. I mean, people question why, because it costs us hundreds of thousands of dollars to build the software, and it costs us hundreds of thousands of dollars to deploy teams to do it. So if we don't sell software, we don't provide products. It's that simple equation, right? Businesses cost money to make money. You got to sell your products. There's no hidden agenda there. But we also want to make sure you get the best out of what we offer. If you want to use this algo, you'll need to purchase it, but you cannot swap past purchases for new launches. Okay, that's very, very important. New launches are not suitable for swaps. Okay, so don't email in the team. Don't ask them, right? It's just our policy. And the policy has been on the website for some time. So you can easily go and get there, Ashley, if you want to put that link in there in case anybody's looking for that. It's been there forever. Okay. So does everybody understand that? Give me a why that makes sense so that you know that, you guys have access to the guarantee. It's just you can't swap past purchases for new launches. Okay. Keeping it simple. Tomorrow, the RSG Algo, 1 p.m. Be there or be square. Why? You're going to have a lot of very experienced people helping you in that event. This is not something to take lightly. These events, we have the best of the best coming in there to walk you through these algos and to walk you through the templates and to walk you through the system mechanics. Okay, take advantage of that, right? Not everybody's going to provide you with those types of resources. Okay. Now, I'm going to go back. I want to thank you guys all for your time. I value you guys more than you know being here. I mean, I love talking shop with other traders. It's just why we do what we do. What I'm going to do is I'm going to go back to the offer slide and I'm going to run a poll. Why am I running this poll? It's simply because I have a team and we need to know how to help you guys. Okay. So the goal here for us is to gauge how many of you guys are requiring our help. And I'm going to run this. I just need to know if you're in it or not. Are you planning on using the software, taking advantage of the price, taking advantage of the discount, buying this algo, coming to the AMA? I'm going to come there. Jim's going to be there. Jeff's going to be there. You're going to have a huge team of professionals helping you with this. The other thing too is this is really meant for a lot of gap traders. For all of you that are in the gap program, you can take advantage of this because it's one of the setups that are there, and Jim's going to bring it in and he's going to even bring it on one of his charts. He's going to show it over time. So this is not just for the algo guys. This is for both. Okay. Jose says, what if I want to buy 2 algos? I like one of the other ones as well. Can I? Yeah, you can definitely buy 2 algos. Jose, reach out to Ashley. She'll take care of you, throw you in an extra coupon there, obviously definitely help you out. Yeah. Yeah. Can you guys please do me a favor? We got about 25% of you guys have answered. The reason I'm asking this is I only have a couple people on support, right? Believe it or not, we're not a Fortune 500 company yet. Right? But we will be. And when that happens, we'll have 100 people to support you. But we only got a few, right? We want to make sure that, and I just need to know it's either yay or nay, right? For those of you that are asking questions and you'd like for us to reach out, Ashley and Jim can send you a follow-up email as well. But I need to know if you're going to use it. Why? Because I want to make sure that my team is here to support the licensing of that and to make sure that you have the help with the installs. Very important. Okay. Help a brother out, guys. Fill out the poll. It's yay or nay, right? I appreciate that, right? It's really for me to help you, right? No hard feelings. If you're not ready, you're not ready. But if you are, let us know, please. That would be very important, right? Appreciate it. Give me a why. Okay. Oh, how many of you guys want to hear the good news? You guys want some really good news? Really good news? It's all for the algo guys. Jim and Jeff and me, okay, we are putting together a 5-day algo week blowout. It's going to be Monday, Tuesday, Wednesday, Thursday, Friday. We are going to be doing algo training on, I think, 8 different systems, building, testing, optimizing, strategy templates, performance, you name it. We're shutting down the trading rooms, for Christ's sakes. We're shutting down the entire operations. And we are going to do a 5-day algo week blowout. That is going to be this month in June, because we're at the end of May. So all of you guys have been asking for training, more training. I'm going to give you so much training, you're going to be sick of me. And I'm going to be there. Jim's going to be there. It's going to be massive. And we're going to do something super sexy for everybody. So promise me you guys don't miss that. But you're going to need algos to be there, because what's the point? If you can't be there, you're not going to be trading with us, right? So just look forward to that, guys. Okay. Great. So I want to thank everybody. Ashley and Jim, there's a bunch of people that have some questions. About 40% of the audience, 25 traders have requested feedback and details. Maybe send them some love, give them a call, whatever we guys got to do, help them people out. A lot of people got questions. For all of you that are in it to win it, a lot of you, right? Got a lot of traders looking forward to this. Good, because it's insane. This is not just an algo. Remember, this was a strategy traded manually by prop traders. Then it was brought into the school. Then we said, hell, we need to automate this. Okay. Great. Thank you for being here. With your permission, have I earned lunch? Can I go grab some food, guys? I'm going to fall off my chair here. Great. Going to end that poll. Thank you guys for giving me time out of your day. Your business is gratefully appreciated. And I want to thank everybody. Yeah. And we'll make sure we get back to you. Anybody that has questions, let us know. Jim and Ashley got your back. Jeff, thank you for all the work. Can you guys do me a favor and give a big shout out to Jeff here? Jeff and Jim, just put a thumbs up or a high five or just a yay or a thank you. Or these guys are the real reason we're able to do what we do. Right. So thank you guys, for all of your work, Jeff and Jim. And just, I know how many of you guys appreciate what they're doing. I mean, I know a lot of times we do these events, but sometimes it's nice to hear that, right? We want to know we're making an impact. We're helping people, right? It's not just about products and events, right? And we want to be able to leave value, right? So thank you guys for all the hard work and the blood, sweat, and tears that goes into these events, because there's a lot of work. Great. Excellent. And thank Ashley, right? The late nights. What time is it there, Ash?
Yeah, it's midnight, 12:15 here, guys.
So she's working at midnight to make sure this event goes on. That's the level of commitment we've got behind our team here to help you guys. Just want to make sure you guys give a big thanks to these people that without them, I couldn't do what I do. So I know someone here said I'm a superhero. I'm only as good as my team, guys. So thank you for being here, and big shout out to the team. It's really important. Yep. Yep. And for those of you asking about tick plays and the prop firm and all that, just please watch your emails. Big things are coming. Big things are coming. It's all in the woodworks. It's just, you can't build a rocket in a couple days. Let's just put it that way, right? If we're going to go to the moon, you need to know it's going to get out of orbit. All right, guys, I'm going to go break. Have a good one. We don't announce the winner until the emails will. So if you're waiting to purchase, don't worry about that. Ashley will basically announce if you do win, we'll refund you the money. We always do. I think, Ashley, we've done that a few times, right? Somebody that won and you just sent them back their money. Yeah.
Absolutely. And we'll also send an announcement in the Discord channel as well, too.
Yeah, we'll announce it, guys. So don't worry. Yeah. Okay. And don't forget, you guys get all those templates. So you don't have to optimize those strategy templates. Those are already pre-built for you. Yeah. You can just take it and run. Right. All right, guys, have a great day. Have a happy 24, and we'll see you in the AMA. Take care.